Number one is get organized. Guys, if you're not doing this now, do it going forward. Please keep your records, your personal records, your checking account records. Use a software like QuickBooks. And if you're not preparing your own taxes but somebody else is, give them that entire file. I promise you, I know if it's us, we're going to squeeze out some deductions out of it that you did not think of because your records are organized. You'll save money just by doing that. Maximize retirement plan contributions we talked about. Only additional thing I want to point out is I have an incredible exhibit, Exhibit 1, not going to go over it, but it just has a wealth of information on, you know, the different limits and all that kind of stuff. So you'll have those numbers in front of you whenever you want them. You can refer to them, and of course that changes every year. Number 3 is an important one. Adjust your withholding. Now, one of my chapters in my Woody's Goodies is free is good. I love free stuff. I love free tools. One of the free tools I've written down through there is provided by Quicken, and it's a free paycheck withholding calculator. And why I think this is important is because many people get very excited about, I can't wait to file my taxes, I'm getting a large tax refund. When I hear that and they call in on the radio shows and they talk about that a lot, it's nauseating to me because you're giving the government a free loan. You don't want a large tax refund. In fact, the best thing that can have happen is you actually owe a little bit of taxes as long as you avoided penalties. If you paid in at least 100% of your prior year tax, then don't pay it anymore until April 15th. Pay it in then. Otherwise, you're advancing the money to the government for free. So play with those numbers. It's worth it. You know, keep the money in your pocket as long as possible. We talked about the consideration of converting an IRA to a Roth, but now even more, now is even a better time to consider that than ever, and maybe even before 2010, because let's face it, the values of our IRAs are just crushed. And that's good for the conversion, though, because it's less amount that you have to pay taxes on. One topic that comes up a lot, I don't know if this would be a question, but there have been some groups that are astute, and I can tell you are, and this may come up, so I'm going to try to answer a question now that may come up. Why in the world would you convert an IRA to a Roth? Because you know that if you put the money in your IRA, it's a guarantee you're getting that tax deduction now. Who knows what's going to happen to the tax law in the future? Maybe we're not going to have an income tax. Maybe we're going to have a flat tax or a sales tax. Not and not. Okay? Our general, I've been in this for 20-something years already. It's hard to believe. But you know what? The taxes are getting more complicated, and it's continuing to get more complicated. We believe taxes are going to go up. You can see the debates right now going on TV. That's certainly for people married, filing joint, making over $250,000 a year. You are going to get slammed. Wait till you see the shutdowns on that's coming. I've been trying to read about some of the proposals. I'm scared for that, but you know what? It makes a lot of sense to convert your IRA to a Roth. Don't worry about what you know is a deduction now versus later, because I'm telling you, it's not changing. I mean, we can't afford to. Okay, if anything, now even more income taxes are going to be required. There's $3 trillion being influxed into this economy. Who's paying for it? How are we going to pay for it? And that's a whole other discussion, by the way, on what's going to happen to the dollar, and inflation, and bonds, and everything else. But I would love to talk about it all, but I don't want to take your whole day. I do want to take your whole day, but today won't let me. Okay, so anyways, great calculator there called RothIRA.com. Take a look at that site, a wealth of free information on Roth conversion. First-time home buyer credit. That's the one that just changed. So I'm going to flip. It's the same information I have written here, except for a couple of differences. First of all, if you buy a house between January 1st of 09 through November 30th of 09, the amount of, you get a tax credit, remember that's an actual dollar-for-dollar amount back, up to $8,000, and you have no longer will you have to repay that. Before you had to repay it over a certain period of time. You don't have to do that anymore. It's free $8,000. Now there are income limitations, but Holly was mentioning this before. Oh, I forgot to introduce Holly. I'm going to do that right after this. Holly was mentioning that they're very high. You can't take advantage of that credit if you make between $150,000 and $170,000 married filing joint, or $75,000 and $95,000. So go buy a house. We need everybody to buy a house this year. That's how we're going to get out of this.